Previously, we talked about the techniques in drawing trend lines. We talked about connecting lower highs and higher lows, drawing parallels of highs and lows, and then the triple fan trend line, which I asked on the group page that you guys forward your triple fan trend line so I could see whether you're understanding and you're following. Today we will be talking about trendline breaks, how to confirm a trendline break. It's very simple. And then we talk about the wave principle, which personally I've used to earn a lot of money trading boom and crash, because boom and crash is one of the markets that forms the wave principle easily, and you can simply make a lot of money with it. You can easily scalp 5 to 10 candles using the wave principle. It's very, very simple. So stay connected. I am Danny Legend, and welcome to Boom and Crash Expert Advisor. What we are going to do first is to identify trendline breaks. So picking crash 1000, for instance, I'm going to take my trend line and then I'll draw from here. I'm just trying to just draw a simple trend line. I'm using H1 because H1 is my standard, and I think it's also the market standard for easily drawing meaningful trend lines. So use H1. It's very helpful. So I'll connect the candle bodies. I preferably use the bodies instead of the wicks, so I can connect something like this. Right, I'm going to teach you two things with this chart. Two things. The first one is this: you have a downward trend. How do you know that the market is going to move up? This is what I did. This is how I bought in the market, because I bought at this point on the crash market and I earned a lot. I bought here. Now this is why I bought there. Whenever you have a downward trend like this and the candles break your resistance, okay, you see we have lower highs, 0.1 2 3 4 5 6, doesn't really touch, so let's say 5, and then the sixth one, it breaks it and it moves up. Don't buy yet, because the market will retrace. In most cases it's going to retrace. When it retraces, the point at which it broke the trend line will become the new support. So this trend line, which was the resistance, when we extend it into, this is why I say you should always extend your line into the future by what? Selecting properties and clicking what? Way right. You see that? Then it extends it. So at this point, when the market goes up and it breaks it and it retraces, it will use the former resistance as the new support. Then at this point you buy. At this point you don't even need to wait for a green candle. You can buy and be sure that the market is going to retrace. So at this point I bought. But if you want to be safe, because probably you are less, you pay attention to risk a lot, then you would have to buy on the next candle. When there's a green candle, then you know that you can confirm there's an upward movement. But for me, immediately the price touched my new support, I bought, and I was caught by a little spike here, but I knew the market was going to retrace by experience, so I bought here. But you can buy on the next green candle. Then as price was going up, this became the new resistance. This was the new resistance. So when you buy here, you should target this place as your TP, this area as your TP. This happens a lot on the market. From henceforth, you just be taking a look. You'd see that whenever it breaks, it comes back down and uses it as a support. Then how do we confirm a trend line break? Let me use this. Now you see this green candle. We are not going to use this first green candle that broke the line, because we are not so sure. It might retrace and just leave us the small wick above the lines. So what we do is we wait for the next candle, and we wait for the low of the next candle that actually breaks this low. call it what? Low. The low of the candle is above the trend line, because it's easy for the high of the candle to break the line and say, oh, it's broken it. No, but you have to wait for the low, the bottom, or the candle close. It should close above the trend line. So if the candle low is above the trend line in an upward trend, then a break has occurred. That's the rule. And then if the candle high is below the trend line in a downtrend, then the break has occurred. So this is where the break has occurred. But as I said, there are two rules playing here. First one is that once this is broken, this is the new support. It was going to come down. And then the other rule is once it's broken and then the low is above the trend line, it was going to buy. So there are two things that is telling that this market is actually going to start to buy. Okay, and I've earned a lot of money here. Okay, so let me use the opposite direction. So now I was using an upward trend. So let's look for a downward trend, so you see what I'm talking about. Let's use this part. So I'll take this and I'll connect this again into the future. Then what do? Let's leave it this way. Okay. Now what do? I have to zoom in and wait for when the candle high is below. The candle high is below the trend line. So I come here and I label this part as what? Sell. Why? Because the candle high, I want you to see it well, so let me just place it somewhere here. Okay, this is fine. I'm referring to the candle high. So this candle high, the high is below the trend line. It means it's going to sell. So you see the sell. This confirms a break. It's very, very simple. If the market retraced, it was going to use this as a resistance. So if it retraced, it would have used this as the resistance and then moved down again. Why? Because we have the candle high below the trend line. So that's how you identify the breaks. Then I want to talk about the wave principle. The wave principle, which is very simple. This is going to happen with the wave principle. Let me delete everything. Objects, delete all. I'm using H1. That's my standard time frame. So let's say price is coming from here. We don't know what's going to happen here. Okay, so now at this point it's not so clear. Sometimes you have to wait for the market to clearly form. So at this point, let's just say this point. This will be my point 1. I would like to increase the size of this. This is point 1. Sorry. Then this is point 2. So when I see the market retracing, I put point 2 here. Then I'll wait for point 3, and when I see the market retracing, I put point 3 here. What we only need are 3 important points. These 3 points are what we need to make a reasonable judgment. So I'm going to take my trend line. Once we get 1, 2, 3, we are okay. Then I connect 1 to 3 and I stretch it out again with what? Ray right. Stretch it out. Then my next point of a support. So once I have 1 and 3, I'm good to go. If I have only 2, I'm good to go, because I'm going to draw a parallel of this line, and that will confirm my next support point. So I'm going to take this. Now I didn't start with the equidistant, so let me clear this and then start with the equidistant. So I'll just take the equidistant, draw from 1 to 3, stretch it out, and then you see the parallel of this line is what? the parallel connects 2 and 4. This 4, do you see that? So automatically it's telling us that once the price bounces off the 3 points and we put 3 there, the next support is going to be on the same line with 2. This is the wave principle. And then it moves up, gets to the middle of the whole channel, and once it gets here, we know that once it hits 4 and is going up, we know that the next point is aiming is what? Is 5, which is on the resistance. So you see it here, it bounces off, it forms a resistance in the middle instead, and then it bounces off. It doesn't go beyond this. So we put a 5 point here because it hits supports again. And what's the next target? This, on the same line with 1 and 3. That's the wave principle. It always happens on boom and crash. If you're very attentive, you earn money a lot with the wave principle. Then the next target word is here, which is on the 2, 4, 5 line. So 7. Do you see that? It's very, very, very easy to identify. Once you get point 1, 2 and 3, you are good to go. Then what happens? It gets to 8, which is on the 1, 3, 6 line. Very simple. This is the wave principle, always happening on boom and crash, always happening. Then what happens? It gets here 9. This is always happening. Then what happens? Before it breaks 10. Very simple. It breaks 10, then when it goes up, it uses the break as a support, which is 11, and it starts to what? It starts to buy. Very, very simple. Very, very, do you see? This is the wave principle. This is the wave principle. It's very simple. So you sell here after you confirm 1 and 2, and it starts to sell, you sell. So if I should even switch to maybe M15, you'd see that at this point in time I can even sell here. M15 has fewer candles, I mean a lot of candles, so it tells us we are still within this. But if I switch to H1, you might see just one long candle, so you might not see it well. But once the wave principle forms, you can switch to M15 and look at the little candles forming. You see it's a massive sell. It hits this, bounces off, gets to the middle, is contemplating whether to hit a support or resistance. Then it hits the support, immediately it starts to buy. You buy here, and your next target is on the parallel of 1 and 3, I mean the stretch. That's why I always say you should what? Take way right, so that it will stretch the trend line. So this is very simple. In my next lesson, I'll be talking about accelerating channels and decelerating channels. Thank you very much. I hope this video was helpful. Thanks for watching. Bye.